I'm Ira Epstein with your SPDR ETF wrap-up for this Monday, November 16th, 2020. All right, so here we are with an interesting day. We saw Moderna come out this morning at just after 6 a.m. saying that the efficacy rate, I love that word, efficacy rate is 94.5%, which means the efficiency of the virus vaccine is 94.5%. In its own terms, which is better than the last one that we saw at 90% from Pfizer BioNTech. And we heard from the Trump administration, their team that they've got for the warp speed, which is phenomenal. I mean, they've gotten all this done in these vaccines. I hope you're aware of that. You know, it takes normally 4 years, and we're getting this stuff done in 9 months. Unbelievable to me. But to make a long story short, they think there could be another 2 to 4 of these type of vaccines yet to come out. Now, the key is get them into the marketplace. What I mean market, our place. A marketplace for them, because that's how they get paid in the end of the day. For us, defend us. It's going to first go obviously to the frontline people, and there's definitions as to what that is and where it goes. But the bigger issue is, what does this mean? It means that worldwide there's a vaccine or vaccines that are going to be distributed, and the likelihood is that we're going to resolve this pandemic by the spring, summer, and it's hopefully behind us. Does it mean we have to take like a flu shot every year? Probably. Does it mean it can't mutate and do other things? No, we don't know enough about it, and I'm certainly not a doctor. But a vaccine is a vaccine, and with that type of rate, efficacy, I love the word, with that type of rate of working, I'm impressed. So the stock market up on that news. Why not? And if you'll remember what I said over the weekend, the market made a decision on Friday, in my opinion, that it's going to look at the glass as half full, not half empty. It will be using all the headline news of the terrible COVID-19 spreading through Europe and the US, record numbers, schools closing, everything closing down but businesses in certain categories, and we will not get full shut-ins. You've already heard that President Trump won't do it. That's going to be up to some of the governors. I live in a city where I swear it could happen any day where a mandatory shut-in happens. I mean, the numbers are terrible, and the hospitals are getting overwhelmed. And this is Chicago. This isn't a little city. You've got the same thing in Pennsylvania going on, and they're starting to react to it. Texas, it's just terrible. But the market's building in that we are just weeks away from the first shots going out, and that'll take over the headlines. And then after that, the distribution. I can imagine what the centers are going to look like. People lined up for shots. So understand the psyche, what's going on. When I look at the tech sector, I had told you I had questions if we would ever fill this gap, and I'm still questioning it. Haven't changed my opinion. The reason is it's so far under some key moving averages. But first, if we take a look at what happened, this is how the market looked coming in. On Friday, we had lower highs, lower lows. Do you disagree with that? I don't think you can. And then today you flip-flopped it when you took out 121.86, and now you've got higher lows, higher highs. This all took place over the 18-day average of closes. Now that's why I don't think this gap has to be filled. And the reason is when markets have gaps like that under key moving averages and start having price distribution in another area, that doesn't mean it can't eventually be filled, but it's not an immediate target. That's how I interpret it. Doesn't mean I'm right. It's my own interpretation. Now that you're back into an uptrend, what puts the market neutral again? Well, if you take out Friday's low, it's exactly it. Then you're back into the higher high, lower low pattern. So that's what you don't want to see. Where's an upside target since the 18, the 100, 200-day averages are below you? Well, it's going to be the upper Bollinger Band. If it's hit, just like it did back here, 125.06. We'll see if it's done. But I know the neutral number, and I know an upside target if it goes, and I am concerned that you're already overbought. Markets have a way with a big up day on a Monday of on a Tuesday taking back some of that. Be careful. When you come to SMH, you're so close to that upper Bollinger Band. I don't know that you're going to hit it or not. You're overbought as can be. You've been in an uptrend. You had these hits here. You fell back. Just a classic case of it, pulling back and now making its run. I think the big pros are coming out of the market up at that number, and they'll keep buying on the pullbacks. Same thing in XLI. It's overbought. You hit the upper Bollinger Band. Ring the bell. Ring the bell. That's where the money should be coming off. I didn't say all of it. You can keep tight stops. The word is tight stops, not broad ones. You're not trending. So if you're in that trade, fine, but I certainly don't see how you were. Energy sector, I get. Been in an uptrend for a while. You fought first at the 100-day average on Friday. You now through it. 200 days is going to be pretty stiff resistance. The combination of that and the upper Bollinger Band, I think the smart money's taking money off the table already. In QQQ, with today's action, you went back into an uptrend. Now, if I take this away from today, you had lower high, lower low, but you stayed over the 18-day average, which means the bias has counteracted all that. If you take out this 292 level, well, then what you've got when you do that is you've got now higher lows, higher highs. Let me give you the negative, because there is a negative. You're very overbought. Overbought conditions resolve themselves one of two ways. They either correct down to get rid of it, or these numbers embed, just the way they did here, where the blue and the red get over 80, go sideways like that, and you typically end up making even higher highs. You're not at that point. I'm not saying it won't happen. I'm giving you what I think of the resolution idea. EFA, emerging markets, they're embedded. This rules the day, nothing else. Until the red line's lost, each pullback I expect to see buyers show up in this market. This is probably the favorite trade that I hear on Bloomberg, Fox, and CNBC. I'm in the emerging markets. Well, they were, and they got themselves buried, but now they're heroes, right? Well, you know, longer term, they're right. This is a difficult thing to ride out, and they did it. They say they did. In GLD, all you've done is come back to resistance at the 18-day average. I haven't forgotten that the 18-day got under the 100, that the pattern on the chart is what now? Well, you already last week had higher lows, higher highs. I was looking for the resistance right into those numbers, and I'm getting them. I don't see anything on this chart that can turn the chart bullish. I wish I did. I guess, well, I'm going to take that back. If you closed over 178.85, I would definitely start saying, no, it is. It's turning. Not just the 18. I need to get over that number too. The gold miners, in order to negate the downtrend that's in place, you got to take out 38.35. Any settlement over 38.44, wherever that 18-day average ends up tomorrow, is bullish. So this can turn just like that. Who's in control right now? The bears. Did they exhaust themselves? They might have. The market is sitting here near a 31 stochastic. Anything under 30 is oversold. There's room to drop, but I don't think you'll attract a lot of fresh sellers. I'm not bullish yet. TLT, battleground, crystal clear, 18-day average of closes. Are we trending? Yeah, to the downside. Lower highs, lower lows. I think the pros are selling it here. I think anything over 158.50, they go, bye-bye, fun to be with you, but you seem to not be able to gather anything from that level. If it drops, back to the 154.93 level. Last, the euro. The euro is in the bull mode. Up tonight about 20 points as well, so acting better in the future still. Trend higher lows, higher highs. Momentum still pointing up in the market, but overbought. What do I mean when I go to you with this? Overbought, oversold, the moving averages. Are you up to date on all that? Do you understand what the pros look at and how they do it? We have put together volumes 1 and 2 of Technical Indicators with our good friends from Futures Magazine. In that, here's what we do. In looking at these, we take each of these parts and we give you full explanations. Each booklet's about 23 pages. We made them into PDFs with this modern day and age in full color. You can print them out, you can read them on your screen, away you go. And this is a key part, money management. You know, so few people get it. The world isn't made of unlimited money. There are people that might be, I guess, but I'm not one of them. And money management is as important as the other disciplines you have. At least find out what other traders think and how they handle that. How do you get this? It's free. Just go to our website, sign up for our free offerings. You'll see it right in there. Or even better, call our staff. They'll, right on the phone, they'll get the email out to you with the PDFs in it. I'm Ira Epstein. You have a great day. I'll see you all tomorrow. I'm going to have, by the way, a live webinar on Thursday. If you're on my mailing list by signing up for free offers, you'll get an invite to it. I'm Ira. Take care.